So what we're going to discuss in this video is something that I feel is more important than ever to be talking about, and that is not just futures day trading, not just Forex day trading, but even the nimble day trading of index options and futures options, but thinking about a shorter, more truncated time horizon. Time horizon versus time frame. That's something that we put in the class notes that I share with members every day, and that's one of the things that I want to discuss here, which is my time frame is typically going to be 1 to 15 minute time frames. Typically 1 minute for stock and stock index trading, 5 to 15 for Forex currency day trading. Now, a day, what does that mean? I typically want to be in the market while I have access to day trading margin, and that's going to be taking me for a limited amount of hours throughout the US trading session. Forex does not handcuff me quite that much because there's really no single day, but I want to think about the active trading hours in Forex, which, by the way, happen to be 8 to 11 a.m. Eastern. So let's talk about where the currencies and the index futures really, for me, every morning collide and give me a tremendous edge. And that is starting off with a look at what the currencies plus bond combination tells us. So we start here with FinViz, and what we're looking at is the one-day relative performance. Now, earlier in the day, our relative performance, and I'm going to share with you what it looked like earlier in the day. This would have been this is before the bell. So you can see here very clearly the yen was sitting on the right side, the weak side, and I had lots of Aussie and New Zealand dollar strength. Now, this is very important, this Aussie strength, this yen weakness, these two juxtaposed on opposite sides, right, of this scale is very important. And finally, I want to look at the 30-year futures. So it's really three markets I'm looking at primarily. I can also take note of where the franc is, the Swiss franc, take note of where the Kiwi and the Loonie are. But if I want to focus on 1, 2, and then the 30-year futures, 3, that's where I will get an idea whether I want to be primarily a buyer or seller, but not both. So first thing, we take a look at those markets and we determine that, hey, yes, the COMDOL strength, the yen weakness is going to have us looking to the long side. Now, this is the S&P. What we basically realize by looking at the V-score, let's make this a little bit bigger, is that we have extremes. Now, we're going to look back to 2 a.m. for those extremes. And normally I'll look at from 2 to 9:30. That's something we started really doing this week. And then 7 to 9:30, which is still the heart of what I feel is the early part of the US trading session. And you can see where those V-score extremes are. They're way down here at -2. Then we have some other extremes, other levels that were interesting that we could have sold off to. Those happened before the bell, and those are right around the mean, as you can see here. So I've got a couple of levels that could be where we find support according to a standard deviation of the volume weighted average price. So when I get down to those levels, then I know there might be something for me to do. So what happened? The market opens and we tested that first area here, basically the mean, as you can see. Now, this being the first of 2 to 3 zones that we could buy, we focused mostly on calls, or we talked about this, calls in the SPY. Now, this is a very important threshold here, and this will dictate whether or not I'm interested in the second half of the day. How active will I be? If by 11:30 I can get an initial balance breach, then I feel a lot more comfortable trading the second half of the day because I've got a different layer of clarity for me. V-score or no V-score, that initial balance breach is going to give me a lot more clarity. And we did not get that today. So the second half of the day, I really wasn't all that interested in. So we divide our day up between 9:30 and 11:30, 11:30 to the close, and 11:30 to close really is going to be viable for us if there's an initial balance breach that occurs by 11:30. Now, this tool that we have running here, We have two versions of this tool for members in the room drive, and this is either our Waikiki clearing, that's the nickname we've given it, or the FMB. You can use either one that you like. But what it does is it lets you know, it'll trigger a vertical line telling you, yes, this particular market has made an initial balance breach or so forth. So what is an initial balance breach? So between 9:30 and 10 o'clock, which is what is known as the clearing, we'll put in a high and we'll put in a low. So between 9:30 and 10, what is the highest point? What is the lowest point? And if that level is broken, it has to be broken by 11:30. So it has to be broken by 11:30. If we can break that by 11:30, I put that 11:30 sort of requirement on there, but if we break that level, it's an initial balance breach. And I put a time cutoff on it. So think about that. Think about the fact that right now, we can be nimble in this market. I think it's so important that we think about being nimble. Let go of what's going to happen in 2 or 3 weeks. Let go of what's going to happen in 2 or 3 months. If you can focus on the next few hours to few days, if you can think about maybe a week at a time or even a session at a time, you're going to be better off at this point, because we have so much central bank intervention, so much central bank action, still a major health scare out there. Not health scare, I mean, there's a lot of fear out there, right? Clearly a lot of people are sick, but what I mean is the psychology is very much on edge, right? So as long as people are still getting sick, our infection numbers are going up, and people are succumbing to coronavirus, we have a lot that this market is constantly thinking of. And if the market's concerned about these things in the near term, it's nearly impossible for us to project out where we're going to be 2-3 weeks or even 2 to 3 months from now. So any kind of discussion of, well, this is going to be how I want to build a portfolio, we can't do that yet. But in the premium video, what I'm going to do is talk about how did we come out of the 2008 crisis? How in the past, when the market has sold off, what are those sectors that are first behaving like a canary in a coal mine, right? So this is where it's great that for a lot of you, this is not your first rodeo. It certainly isn't mine. So there are certain sectors that start to level out, and we're not seeing that for the most part yet. But we'll talk about that in the premium video. For now, stay nimble, enjoy the long weekend, and I'll see you in the next update.